sometimes we're so busy fighting with the 63% of our day on petty admin that we're working in our business and not on our business. A chap said to me, I don't understand how you can charge so much less commission than us and still make a profit. And I said, I don't understand how you can't. I am Ed Hosi of Challenger Broker Hub, and this is the future of insurance.
And it's great to sit down with you. And on this side, you've had me on your show, but it's very nice to get some time with you and hear about what's going on. Can you give everyone just a little overview of the world of Ed? Who are you and what is it that you do?
So yes, of course. I am Ed Hosi. I am COO of Challenger Broker Hub. We're trying to bring broking 2.0 to the market, reimagining the relationship between the customer and the broker, and reimagine that value chain and the service that's being provided. And I came from the insurance industry very much so. I was an underwriter, came into the industry as an underwriter way back as a property underwriter for Aviva, and kind of went up through the gears there, ultimately moving into technology. And I think it was that move into technology where I suddenly saw exactly what was possible using tech to solve all of the issues that we've got in insurance. And I don't think we do enough of it in insurance. I think there's a lot more that can be done. And the question is why we're not doing it.
Yeah, well, that's what I was going to ask you is like, we need to talk about Hub and what it is and what you're trying to achieve. And I know that's intertwined with this idea of what we're not doing and why, but we certainly spend a lot on technology. But are we getting good value for money? What do you think is holding the industry back there? Do you think there is an answer?
I hope so. I'm hoping I found it.
Yeah.
But I think fundamentally for me, the model of insurance is broken. I think that's where we need to start is how we trade insurance. Because if that's not working, it's a bit like when we talk about automation, right? And when I was at Automation Anywhere, they always talked about this thing. If you automate a bad process, you're just left with a bad automation. Yeah. And I think we've got the same issue with insurance, that if we fix and we put tech around it, if we haven't actually solved the fundamental issues, we're just backing ourselves into a corner, and we're not solving the fundamental issue that we have as an industry. And I think that the issue is several-fold. One example that I've talked about before, and I think you'll understand where I'm coming from on this, is commission. So commission is normalized. Everyone takes commission. Commission to me is the most back to front possible method of being remunerated for the work you do as a broker. It's essentially beating you with the carrot and feeding you the stick. It's saying, if you, Mr. Broker, go and get me a better quote for my insurance, I will pay you less. And if you get me a worse price, I'll remunerate you more. That whole thing is back to front, and that we're not every single day as an industry going, well, that's broken, that's crazy, and are just accepting that as, well, that's how we've always done it. Yeah, that is one of the greatest indicators of how broken the industry is. And then you look further at something like bordereau, for example. So when you've got a delegated authority, you complete your bordereau every month and say, here's the stuff that we've bound cover on in the last month, which often comes 8 weeks after you've already bound cover, and 8 weeks after you've already been on cover for risks that may or may not be within the boundaries of the DA that you have. Yeah. And again, we accept that. Oh yeah, populate that in an Excel spreadsheet for us. That would be great. And we normalize it. Whereas actually it's like, yeah, we've got these things now. They're called APIs. You could just push that data to me in real time, direct from your system with no double keying. Should we build that? That seems a lot more efficient. But again, don't question it. We've begun to accept and normalize things that make absolutely no sense in the industry. Yeah.
My time in claims, that was a very real problem for any of the delegated authority programs, MGA business that we had. We would get claims in and we're like, we can't find this insured anywhere. They're showing us a document that looks like looks like we're on risk here. We have no way to know what it is. And, they're sending us like a snippet of something, so we can't even make sense of it. And then you end up calling around or emailing to the ones who are slower to report to try to figure out, did you write this? Did you write? Like, that's not a way to handle claims. There is a real problem with this. It's not just our books are behind.
Yeah.
Because claims come in those first few months. It's possible. Sometimes they come in the day that the policy was bound. That's a different issue. But yeah, no, it is very real. That's a problem that's always existed. But you mentioned APIs. It doesn't have to exist anymore. Yet, well, we've always done it this way. So why would we change? Like, because it doesn't work, and it can now.
Yeah, I think we've got to think bigger as an industry. I mean, we've talked as an industry ad nauseum about legacy tech and some of the issues we have there. There are systems and platforms that we've put in place as an industry that have held us back. They've stripped us of our agility and stripped us of our ability to get access to our own data and be able to move forward. I think we all know that it was a bit of a sell your soul to the devil kind of situation, I guess, where we needed it, we had to put it in place, but it's hindered us. And that's kind of why InsurTech, I think, has had such a great run and gotten so much momentum, because it's cleaned the slate and it's enabled insurers to deploy their capacity in laser focused distribution methodologies where they go after exactly the risks they want without all of that issue before, and therefore they can be far more optimized from it. I think it's quite an exciting part of the industry in that sense.
Well, so talk to us about Hubb itself and what it is you're doing, and you're doing things quite differently. And I think some of that may require explaining the structure in the UK on the distribution side and where commission sets in and what's normal commission. Because you've shared with me, what some of your competitors are charging for commissions, and it blew my mind. And I was like, I should have moved to the UK and become a broker, because it's quite nice commission rates. But yeah, fill me in on, or fill us in on what is it that Hubb's doing and why is it different?
Yeah, so fundamentally, if I go back maybe to the start of why we've made the statement several times before that we think broking's broken, commission being one of the reasons. But the real reason that broking is broken and why we think it's vulnerable is there's an inability for the majority of brokers in the UK to grow organically. They can't get the levels of growth and the level of new business that they want to be able to pile it on to appease shareholders, to hit their targets and the like. And the reason they can't do it is because they can't differentiate. They all look, smell, sound, feel the same. They've got access to the same markets with the same products that are distributed in the same way. So their only answer to that is, you've got twofold. You've either got a really high customer acquisition cost model, which is, if you look at the average cost now of the word insurance on Google Ads, $55, I think it's up to now, as a price point to bring that in. Or you've got the one that they always go for, which is quick, dirty, let's do a merger and acquisition, let's go and buy up every business. We've seen 10,000 brokers in the UK whittled down to just over 2,000 now, through merger and acquisition at multiples of EBITDA that we've heard people say, multiples don't matter. They don't, when that cost is being passed on to the insurer, onto the insured and onto the customer. And these kind of the customer acquisition cost is therefore so high that there's no longer a relationship between the amount the customer's paying and for the product and the actual service they're receiving. It's not reflective of the service. It's reflective of how much it cost them to acquire that customer.
Yeah.
And I think that's fundamentally where it's broken is. And then you've got to strip it back from there and say, so if we did want to grow quickly, what makes a customer buy? And Reuters did a big study on this, and they found that customers care about two things. They care about price and they care about cover. I don't think anyone's going to be surprised by that. They care about get the right cover and what's the least amount of money I can possibly pay for it. Now, cover, sort of not really in our control as brokers. It's what's available in the market, what insurers are willing to give, and the price they're willing to put on it. And that's the other point is the price they're willing to put on it, the net price. What is the insurer willing to write it at? We can't control that beyond a certain point, because if I go and get you an amazing price, the insurer is obliged to give the exact same price to every other broker that goes to them.
Yep.
So unless I've got access to a market or a product that someone else doesn't, I'm stuck. And I think that's the challenge you've got, is you need to then take that product to the customer and sell it to them. And so the point being, the only thing you can therefore change is what you take in terms of your remuneration as a broker.
Yeah.
That's the only bit you've really got control of, the service you provide and the remuneration you take. Now, the service is going to be let's be honest, it's much of a muchness from one broker to another. I don't think there's vast differences, not that would be wildly noticeable by the customer,
Yeah.
for the average customer, particularly those who don't have claims, for example, claims-free customers who don't speak to their broker in between renewals or change their policy a lot. So I think we looked at it and said, well, how can we bring the price down? How can we bring what we need to take down so that it's more palatable for the customer? The only way you can do that is to become more efficient. And in our opinion, the only way that you can become more efficient is to leverage every single possible technology you can consider and really understand the process and understand where you're wasting time, where you're wasting resource, where you're not adding value, where all the kind of leakage is in that transaction, and point tech at it to resolve it.
And is that something you can do from being an insider to the industry, or do you, because I mean, you've been in tech and you've been in insurance. Does it take an outside mindset or viewpoint, or can you do it even if your framing is like insurance blinders, because we've always done it this way and we have to do it this way and we don't know what other options there are? Did it take breaking outside of that?
It's a really interesting. That's a really interesting question. I think I agree with. Yes, I think it needs an outside mindset to a point.
Yeah.
But I think someone said to me once, and I completely buy this. They said some of the issue with insurtech is that it's either insurance folk playing at tech, or it's tech folk playing at insurance.
Yeah.
And I think it's when you can marry the two. And I had quite a really unique career path, having started off in underwriting and been at insurers, and then going into technology and building that out and being very involved at quite a deep technical level on that. And then my co-founder Mark very much has been through the whole insurance market, in terms of the broking market. And when you can put those two career paths together, and then bring in John, our third co-founder, whose experience is all in sales and building sales teams, and you can put those three strategies together and make them work, that's when the real magic happens, I think. And we see a lot with insurtechs as well, that they can build great products, but distribution falls down because they don't understand the nuances of how insurance is sold. They don't have that sales background of understanding how to build and scale a distribution model. Because I saw a great quote recently, which I tweeted about, which was, first time founders obsess over product, second time founders obsess over distribution.
Yeah.
And I talked recently with another insurtech. I went for dinner with one, and they said to me, how big are you now? And I sort of said how quickly we'd grown. So we're in the top 100 brokers now in the UK, from a standing start in just over 18 months. And I told him my GWP figures, and he looked me dead in the eye and he said, I don't believe you. I said, that's where we are. And he said, well, we've been at this a lot longer than you and we're not there yet. How on earth can you have gotten there? Because we've done everything we can think of. And I said, ultimately, we as founders wake up every morning and we go to bed every night, and our last and first thought of every day is, where does our next £1 million of growth come from? That's all we think about. Everything else is a nice to have. The growth is what's there. There is no point having an amazing product if no one knows about it and no one's buying it.
Yeah.
And that's where our focus has been. How can we distribute this? How can we get it out to as many people as possible? And how ultimately, why are they going to buy it from us? And how can we make that happen?
Yeah. I've got similar quotes around the importance of distribution. And it's interesting that I think that the earlier insurtechs who got the most attention came out of the gate similar to you in saying, like, this commission model makes no sense. They went down a different path with it, though. It's saying the whole thing's broken. It's all stupid. We're going to do away with that. Who needs agents and brokers? That's a complete waste of money. We're just going to sell direct and basically like free money. And we're going to kill everyone. And if you look at it, pretty much every single one of them, fast forward 18 months, 24 months, whatever it was, realize like it's really hard to acquire customers. There's a reason why distribution costs what it does. And then they pivot and they start appointing agents. And they've never made a dime. Most of them have lost significant amounts of money, not just as startup businesses running fast, but on the underwriting as well, that their books are really low quality, or at least just very poorly priced for the quality that it is. So there's no underwriting profitability in it. So they're sort of the opposite of firing on all cylinders, backfiring on all cylinders, maybe. You just mentioned really fast growth. You're talking about the costs of commission being out of whack and what's the value for that commission. So to a layman, they might be like, this is just another, I'm not going to name names, but another hyped up insurtech story. And I'm sure it's crap. And your friend shouldn't have said, I don't believe you. You should have said, yeah, but you're losing a ton of money, I'm sure. Your experience is quite different. I want to dig into this.
Yeah, so I think it's really easy to spend £10 or $10 and bring $1 in. I can just I can just buy business in, and we've not really taken that approach. The biggest thing that kind of validates our model. So we typically charge 20 to 30% less than our peers. That's typically where we are.
Material. Yeah,
it's quite a lot. It's quite a lot, and bear in mind that we're not targeting. This is the other area I think a lot of insurtechs are spending too much time on £200, £300 policies.
Yeah.
You've got to write an awful lot of £200, £300 policies to make any money.
Yeah.
And it's often, and as we said, with how the hard distribution is and how high customer acquisition cost is, particularly on Google Ads and the like, I mean, it's a bloodbath. It's an absolute bloodbath, and the money's coming in from investors going straight to Google, straight to Facebook, straight to and just disappearing. So I think there's a real challenge there. So our typical customers paying around £13,000 for their insurances. We're going for the M in the SME as opposed to the very small side of things, because that's what we think in commercial. Yeah, completely
business insurance. Yeah.
And that makes a real difference, because I remember having this conversation with you previously where I said a chap said to me, I don't understand how you can charge so much less commission than us and still make a profit. And I said, I don't understand how you can't. And you need to answer that question, not because I am. The numbers are there. We're doing very well. We'd always like to be more profitable, but to actually be growing as quickly as we are and being so close and in and around, I'm not going to pretend we're turning over vast amounts of profit and we've got more money than we know what to do with. It's tough, but we are marginally profitable, and that's really important. But it's because we think, again, where's the money going to come from? Where is the distribution going? But moreover, where are we spending our money in terms of the process of customers buying and being serviced by Hubb?
Yeah.
So we look at the entire I come from an automation background. So we look at the entire process of the customer coming on. Where are they spending the time? Where is our broker, who, if you look at the future of commercial insurance broking, they suggest up to 63% of a broker's day is spent on petty admin.
Oh.
You halve that.
Yeah.
This is a broker who's probably on £70,000 a year. Certainly in London, would be £70,000 a year, and you've got them doing 63% of the day on petty admin. You should cut that down by half and automate those processes. And really get them to high value tasks, get them to the things that you pay them for, where their expertise is. And that's what we focused on, is what is our process? How can we optimize it to within an inch of its life, and just be dealing with things by exception, dealing with the things that needs a human to look at it, and that has value in. Good example of that, claims. There's only so much you want to automate claims, right? Because the customer wants to speak to another human being. They want that reassurance of, oh, we've heard you, we're going to do it. They want some support. I don't think you should be automating that. I think that's exactly where we do want people adding that human touch, that thing that a computer can't do, which is empathize, reassure, make someone feel supported.
Yeah. There's lots of procedural bits around that could be automated, but but the actual handling of the claim, that's a human to human point in so many cases.
Yeah, absolutely. Updating on the latest, this is the latest position on it and the like. We can automate elements of that, but actually taking that, that first notification of loss, for example.
Yeah.
It actually goes further than that, I think, as well. And we look at F&O is a good example of this. Why not use that? Where it's actually about meeting. So we use a phrase quite a lot at Hub, which is meeting the customer where they are.
Yeah.
And I mean that in every sense. I mean that physically, mentally, emotionally. Where are the customer? Where are they hanging out? How do they feel? How do they want to trade with us? What do they need from us? And meeting them at that point. I think at times as an industry, I think there's I'm going to say it, Bryan. I think there's a little bit of an arrogance in the industry of saying, you will meet us on our terms as an industry. Yeah. You will come and trade how we want you to. And too often we weaponize compliance as the reason for that. We kind of say, oh, well, because compliance dictates, and it doesn't. We just want you to do that way because often that's how our system works, or right, because that's the most cost effective way for us, or whatever it might be. I think it's really important that you meet the customer where they are. If they want to speak to someone on the phone, they can speak to someone on the phone. If there's someone who doesn't like speaking to someone, they can submit it online on an online portal. As long as you give them the option, let them pick. They're adults. Let them choose how they want that service to look, rather than always expecting them to do it how you want to do it, because they're the customer.
And there's been a lot of talk about automation in the industry, and expense ratios on the carrier side basically haven't budged. But you're seeing a material impact on the broking side by doing that. Is it simply automation, or are there other things that you're bringing in to bring more intelligence into it, to, short circuit processes that don't even need to happen, or questions we don't need to ask in applications?
Yeah, so you may have seen not far off this time last year, we made the acquisition of Digital Fine Print. Or DFP as they were more commonly known, and that was a huge addition to our team, not only because of the technological expertise we brought in house, but the capabilities that gave us within the tech. So Digital Fine Print was all about data augmentation. It was all about looking at existing question sets and saying, do I really need to ask the customer that, or have I already got that data at hand? Yeah. So if I look at a hospitality question set, so we say a restaurant, we've managed to build out DFP in such a way that question set that would typically be 50, 60, 70 questions, we've managed to get it down to 6 questions. Now, what that does is it makes the onboarding a lot smoother. It makes it easier for the customer to say yes. It feels less arduous. It feels more like we're doing the work and not them, which I think is a really important mental point. And there was an ad campaign that went out in the UK that you might have seen when you were over here, which is, it was an Aviva one, and it was a kind of joke about this person who was trying to buy insurance, and they had the bright light in their face, and it was an interrogation. They were like, "Are your locks ISO compliant?" And it was, and I think that's a really good example of how customers feel. They feel interrogated, and if we can reduce that down with the question sets by looking up third-party data, by applying data science, algorithmic assumptions, and again, getting them to answer by exception, not by answer 75 questions, it's so much smoother.
Yeah.
If you then put a layer on top of that of AI and machine learning, I think this is one of the other issues that you see in terms of the time that brokers spend, that 63%. They get on the phone with a customer, they speak to the customer, and they capture all these 450,000 questions for actresses, question set that needs to meet the requirements of everyone. The customer's absolutely exhausted. Then they write that up into a presentation, and then they think, who are we going to send this to? We've looked at that and said, actually, it should be really clear to us who we send it to. It shouldn't be a human decision. It should be a data-led decision. Whose appetite is this within? Who is competitive on these risks? Who, that answer to that question there, who's going to write that? Who typically will write that, and who won't? Who should we not send it to? And then sending it to the right markets based on the AI, not based on, wow, John took me out last week for a game of golf, so I probably owe him this one. Yeah. That's not how you should be doing it.
Yeah. Or just shotgunning it to everyone, which we've all seen. It's like, I told you last week, we don't do, FI risks or whatever, and you still sending me 20 of them.
Right, exactly. So I think that machine learning part of it is really, really important. And then I think there's more things from there that we've built and we've applied on top of it that is actually proactive risk management, but automated proactive risk management. So how many brokers out there at the moment? We have a problem certainly in the UK, and this is a stat from RICS, 80% of commercial property is underinsured.
Yeah.
Now, how easy it is to get a rebuild cost, an accurate rebuild cost on a building. Brokers aren't doing it.
Yeah.
You've got the square foot. Well, you should have the square footage. Very easy to obtain in the modern world. But you've got the square footage. You've got the construction. You know the risk. You would hope as a broker, and you've got all that information. You know the number of stories, etc. You should be able to give them a really accurate rebuild cost. Why is 80% of property underinsured?
Yeah.
And again, automated, doesn't need a human to do it. Just
Right.
you've got the data, give them the calculation.
It's not effort. You just need the tools in place.
You just need to think about it. You just need to want to do it, I think, is the main thing. You need to want to improve that experience of the customer. And I think sometimes we're so busy fighting with the 63% of our day on petty admin that we're working on our in our business and not on our business.
Yeah.
When we should be looking to improve the experience. I saw a thing the other day on LinkedIn, surprise, surprise, which they were talking about how every CEO in every business should try and buy their own product once a year and experience what it's like. And I think some CEOs in the whole insurance, and that's not just insurers, that's at brokers, MGAs, vendors, I think they should all, I think that's a brilliant bit of advice. Go and do that.
Totally agree.
See how hard it is.
Yeah. And you have to do it sort of undercover boss. Don't tell them who you are when you're trying to come in. Don't get your assistant to do put on the fake mustache and a wig or whatever you need to do. And because you need to see firsthand what it's really like, and park your ego and your hubris at the door. You need to be open to what you can find. And I know we're tight on time, but I do want to ask you about, I always ask people like, where's the future heading? There's something in particular I want to ask you about, because you're one of the few people that I directly know, and I've seen how you've done it a bit, who's doing some things in the metaverse and kind of, experimenting with it. And I know Hubb has used it in remote working and to try to, think about how you bring the team together. Can you tell us a little bit about what's going on there now? And I think there's a lot of hype around it. People, are in one camp or the other. Since you've actually experienced it, what do you think this looks like going down the road for us?
I think your final sort of sentence there is really important. I've actually experienced it, and I think there's a lot of tendency within insurance where we are trained to be risk averse. We are trained to see things that might be damaging and avoid them at all costs. To kind of just dismiss things quite haphazardly.
Yeah.
And I remember when we first said, we're using the metaverse, and people went, "Oh yeah, you're the ones who are using the really kind of like rolling their eyes. Oh, you're using the metaverse," and we're like, "Yeah, really successfully." So we just literally had our last board meeting in the metaverse, and it saved me £600 on travel, because I would have to have taken everyone into London from all around the country.
Yeah.
Actually, as a result, it meant we could stay longer. And what was great was we could bring up our latest figures on a massive board. And a guy at the back of the room said, "Oh, I can't see those numbers." So we just made them bigger. And I had my monitor in front of me, which I could just stretch because I needed it. I needed that more. I didn't like where I was sat, so I just went and sat over there instead. There's so much possibility with the metaverse that I think it's really easy for us as insurance folk. I think we are way too quick to go, that won't work, not doing that, let's do things exactly how it is. How's that actually working for you, that 2-hour commute into London and then sitting in an £1 million a month office that you're having to pay for? For us, it's worked brilliantly. However, I recognize some of the cynicism. I think this is very much metaverse 1.0 or 0.1. I'm not even sure.
Well, we got legs now, so that we're getting closer to 1.0, but yeah.
Absolutely. But I think there's a long way for it to go for it to be viable. Interestingly, I think the new headset that they've just launched, having reviewed it, I think is a fantastic leap forward in the tech that makes the overall usage of it far more viable. It's a lot lighter. It actually reads your facial expressions and match where your eyes are looking. It's more comfortable to wear for long periods of time. It can see the world in front of you in full color, which
Yeah.
is important. At the moment, you see like this weird dreamlike state in front of you, so you can't really see what you're looking at when you switch off the actual VR. So all of these things are really important, not at a £1,500 or $1,800 price point.
Yeah.
Now that will change really quickly. If you look at all of these things, look at the original avatar that Zuckerberg put out, and everyone was like, "Oh God, it's like something out of it's nightmare fuel." And now look at the latest one he's put out, and you go,
Yeah.
"That's the progress in a year of we've gone from something that you go, oh my God, that's nightmare fuel and unusable to, oh okay, that now starts to look good. Oh, and now you can map your face onto it, and now you can have legs and make it feel like that." And we found it far better using the metaverse for team meetings than we ever did Zoom.
Well, so this is what I want to get at is I heard you on the board meeting and I'm like, yeah, but you can sort of, but not 100%. You can do a lot of that through Zoom or Teams or what have you, other telepresence solutions. And I've done board meetings with, the Cisco or Polycom, whatever the camera system that we had. And so then I'm thinking, is it just different or is there a material improvement? And is it even something that you can't point to, but you feel it when you walk away? Like not to keep talking about myself, but I did like 6 Zoom meetings back to back. And in one of the meetings, the guy had, he was outside, like on his patio or something. And there was sunlight and trees and everything else was either a virtual background or like a white wall or someone's office or whatever. And when I finished that meeting, I actually felt refreshed. And I realized the whole time I was sat here in my basement. I did not get outside. I had no fresh air, but there was something about the presence of like life that made me feel better. And I'm like, okay, there's nothing materially different in that meeting, but my experience of it, I knew was different just for that simple twist. Is it that sort of intangibility or were there tangible differences that you say, no, hang on, we could not do this in a 2D in a Zoom world?
A bit of both, but I actually think fundamentally you've nailed it with that first part, which there is something intangible about it that you're right. In principle, it should feel the same as the Zoom, but it doesn't. It feels after the first 5 minutes of giggling and tickling one another's chins and sitting on people's laps accidentally and all the silliness that you do with the kind of proximity of it. Once you get past that and it's about 5 minutes, you genuinely feel, or certainly everyone in our team has commented, you feel like you are in a room with that person.
Yeah.
It's the sense of the brain. It's the being able to look around and being able to look at the person speaking and not having 6 static faces in front of you on a screen that are very flat, and that people can just turn the screen off, turn their video off when they want. The other thing I wouldn't underestimate, you would have sat on many Zoom calls with absolutely dreadful sound. The sound quality on a headset, given where the microphone is and where the earpieces are, is absolutely second to none. And it makes just hearing people, it's worth it for that alone, being able to better hear people. Overall, though, I think where it's going, we sort of came out and said, we're the first metaverse ready insurance broker. And that ties in with what I said previously about meet your customers where they are. If they want to meet us, we're now able to meet them there. And we've gotten ahead of the technology so that in a minute, when we get to version 2, version 3, version 4, we're not going, oh, right, so this metaverse thing, should we have a look at it? We've already learnt it. We know what works. We've learnt to work in it. Our staff are aware of it. Yeah. We know what we can get out of it, what we can't. We know the limitations. So we're leaps and bounds ahead, and we're already going on to that next phase of taking what's possible out of version 3, not just trying to go, so how do I plug this headset in? And I think it's getting that advantage. It is coming. Anyone who says to me that, anyone who reads the headline, and for the love of God, stop reading headlines, read the actual body text of articles, because we've got a real problem with that in society in general. If anyone who reads the headline and goes, oh, the latest metaverse, there was only 500 paid users in it. And you go, one of many metaverses. It was Metaverse World, which has a really specific use, hadn't been advertised a massive amount, was paid, as they say. Actually, when you look at the users of the metaverse, it's not really targeted at the right people at the moment. One of many metaverses. The metaverse is an amalgamation of hundreds of different metaverses. Sandbox, Roblox is actually a metaverse. And when you start to look at some of the gaming uses of it, someone said to me the other day, they went, yeah, but does anyone, I read an article, they said they read an article. I read an article, only 500 users are in the metaverse. I went, try 400 million users monthly, active monthly users of the metaverse. Too much money. I always think follow the money, and the money is investing in the metaverse. Too much money has been put in. We talk about in insurance, too big to fail. Too much money has been put into the metaverse for them not to find a way to make it more viable, be it better technology, better headsets, more immersive experience. But at the moment, we're still very, very early doors on it, and we need to let it evolve. That doesn't mean you dismiss it from the get-go, though.
Yeah, I think that's right. Is it may not be for everyone to I hesitate to use the word play in it, because I don't want to think it's just for gaming, but like to experiment, to try it, to go where you all have gone at Hubb. But that also doesn't mean just write it off. And I was at a post office in like 2006, I think, and there was a guy talking to one of the postal workers at the counter about how he thinks this email thing is just a flash in the pan. And I was like, not 1996, 2000. Like, I think we're past that point now. But that sort of mentality, there's lots of that right now relative to the metaverse. What are you gaining by doing that? Just don't use it. But to just completely swear it off, not pay attention, not think about it, that's where we end up costing ourselves.
It's people saying this metaverse is rubbish, it's all a nonsense, it's all a fad, and then 99 out of 100 you go, have you used it? Oh no, I've never used it. So you're not really qualified to make any comment on it. If you haven't used it yourself, you're just regurgitating the opinion of someone else who, in the majority of cases, will have probably a reason. They may have their own agenda for saying that. Go in, experience it, try it, see what does and doesn't work for your team. And that's not just the metaverse, that's anything.
Yes,
especially in tech. Go try it, see, fail fast. I'm the king of fail fast. I built a whole TV studio for no apparent reason other than to feed my own ego, because I thought I wanted to see if I could do it, and I wanted to see if it worked, and I wanted to see if people would watch. If they hadn't watched, we wouldn't have done it again. But I think it's really important as an industry that we are far more open-minded to new technology, new ideas. And if we're not going to, then we're going to get left behind, because other industries, people from other industries, and this is such a cliche, but the likes of Google, the likes of Amazon, they're going to come in and they're going to eat our lunch, and we're going to still be sat there like blockbusters in 10 years time saying, oh, no one's going to buy from no one's going to subscribe to Netflix. That's exactly what we're going to be like as insurance if we don't stop thinking we know better than our own customers.
Yeah, that's really well said. And we could easily keep going, but I think that's actually a really strong point to lead on. So I do want people to take that and be like, okay, action time. We should do something. So thank you very much for joining me today.
Thank you very much for having me. Very enjoyable.
So great to get time with Ed and for him to share what they're building at Hubb with you, which I think is a really good challenge for all of us, because to an outsider, you might say, well, we've seen this before, loads of VC money. They're just burning through that by, losing money on everything that they do so that they can compete on price, basically cutting their commission. So they come out cheaper and then they win. And that's what they've grown. Well, they have cut their commission. They are cheaper. That is a big part of how they've grown, but they're doing it profitably. And actually, they haven't taken any VC money, including when they made an acquisition. So it's not what you think it is on the surface. And that's why I think it's such an interesting story to bring to all of you. Is here's a prime example of people who are achieving despite all the things we say are impossible. And kind of to Ed's point, when someone pushes back and say, how can you possibly be profitable only charging 7, 8, 9, 10% commission? And Ed's response being, maybe you should ask yourself how you can't be. And he's right. That is a challenge we should be asking and then saying, well, what do we do about it? And I think a lot of the answers to why we can't be are locked up in things that maybe we've got blinders on about, or we just take as a fact or a way that it has to be. Like you said, like we use, regulatory compliance as a reason why things have to be one way or another. When in fact, maybe that's not the case, or it's just the way we've done it. And we've sort of grown numb to that being something we could question, or maybe we could find a different answer for. Sometimes it takes a new perspective to get there. So I appreciate them doing that. And I appreciate Ed coming on to share that with you. And interesting to dig into the metaverse stuff because he has, I'm going to say, played around with it, and not just in gaming. That's firsthand perspective and seeing how it can work. So I know, we've all seen lots of hype on it. Who knows what's happening or what could happen? Well, Ed and the team at Hubb are actually giving it a go and seeing how it could impact their business. And yeah, that does position them, if this does take off or there's future iterations of it, they're just that much further ahead and already bought in and engaged. So they can really just keep running, not even hit the ground running, because they're already doing that. So congrats to Ed and the team at Hubb for what they've achieved. Much success to them going forward. And thank you to all of you. I hope that this was interesting and you got something out of it on the broker side, on the challenge to how we've been doing things side, and curiosity around the metaverse from someone who's doing it right now. Thank you, everyone. And I will see you back here next time.